In today's video, we're talking about whether this is the bottom of real estate prices in Canada, and if now is the right time to buy in Victoria, BC. I'm a residential agent in Victoria, so I want to provide a little bit of forward-looking guidance, what I'm looking at currently, as well as what I might project or expect over the next 6 to 12 months. If you get value out of this video, make sure you leave a thumbs up and a comment down below. And if you're new to the channel, make sure you subscribe for more great content on the capital of British Columbia. Now, without further ado, let's jump into what I'm seeing in Victoria and what's shaping realities of buyers and sellers in our current environment.
Higher mortgage rates have contributed to a sharp slowing in housing activity from unsustainable levels, and consumer and business spending on goods is moderating. This has led to declines in house prices and is exerting downward pressure on goods prices.
Point number one, the fact that rates are high and may continue to go up. There's a few things that have come in over the last little while that likely give reason to the idea that the Bank of Canada is going to raise rates in a more upsized way at their next policy announcement on December 7th. We had a jobs report in October, which may end up getting revised, but nevertheless came in 10 times higher than economists' expectations at 108,000 new jobs added to the Canadian economy. The other thing that isn't helping the case for rate hikes stopping is the fact that the CPI print for October just came in flat from the previous month. A big cause of that is the fact that gas prices spiked once again, where we saw them fall in September's CPI, so we're still at an even 6.9%. More positive news on the US side of the inflation story. Their data is finally starting to roll over, and it looks like inflation has peaked out, or we could call that it has peaked out and is starting to trend down. But the question both north and south of the border has now become, how sticky is inflation going to be, and how heavy-handed are central bankers going to have to be as a consequence of that? We've seen Canada's peak out, drop, and then now flatline month over month. Is that going to be the case in the US? And how close is the Bank of Canada going to trail the Fed down south? The nuance that Tiff put forward in his last presser after the last policy announcement was leaving the door open for another upsized rate hike, but also getting to the point, or alluding to the fact that we were close to the end of this rate hiking cycle.
Looking forward, we also indicated that we expect interest rates will need to rise further. That suggests that, well, that could be another larger than normal step, or we may be able to move to more normal, smaller steps. We are getting closer to the end of this tightening phase, but we're not there yet.
My personal call, I think we're going to get 50 basis points on December 7th, and then they're going to call it. But difficult to say at the best of times. That's just what I think. The crux of that will be what happens down south and whether they follow suit. Some economists say that the Bank of Canada probably won't be at a difference of their terminal rate by more than 50 basis points compared to the US, but that remains to be seen. A little bit more positive news in mortgage land is the fact that the 5-year bond yield likely has also peaked, which means with bonds ripping, yields dropping a little bit, those 5-year fixed rates should stabilize. Nevertheless, on the ground here, demand is low as it is across the country. Victoria has been much more resilient than other parts of Canada to this point. The benchmark index for a detached home in Canada is down 15%, where Victoria's is just 8 or 9%, so about half of what we see across the country versus what we're seeing in Victoria. But if the common thought is that rates will remain high for some time, and even if we're at or close to our terminal rate in Canada, they will hold based on what we see in previous hiking cycles for at least 10 to 12 months before they start cutting again. That means that real estate demand will continue to be suppressed. But as I've touched on in previous videos, the floor of prices in Victoria really has to do with the supply and demand dynamics that are happening on the ground here. And the thing that I mentioned in my last video is the fact that the rate of change in prices has begun to slow and stabilize, largely as a consequence of inventory. As we move into the fall season, people really aren't listing their homes for sale unless they have to. We aren't seeing a lot of distress sales, and consequently, we aren't seeing inventory lift in a meaningful way. We've kind of hit this ceiling of 2,300 active listings, and I don't think we'll get up or above that until we get into the spring market next year. December is very very slow. January is very slow, as is February. But as we get that trickle of activity in March, that relationship could shift. Another reason why we're not seeing inventory surge is the fact that folks are conditioned to think that things will improve in 6 months or a year. So everyone thinks that in down markets, things will rebound. There's a lot of belief or faith in Victoria, BC real estate. So I'm hearing a lot of stories anecdotally of people saying, you know what, we're just going to wait till the spring and things will be better in the spring. And more people will be awake and looking at real estate then. There will be more activity. I can't say for sure that that will be the case. And if I was advising someone right now, I would say, well, it's more likely that you have more people listing in the spring. And if demand continues to be suppressed, that's where we could see a shift happen in this supply and demand and absorption rate in Victoria, which has stuck around 20% or so for the last few months. Rental prices also sky high. And don't forget that in the last 4 or 5 years, we've seen most property owners, especially speaking to detached property owners, seen their properties almost double. So their options to refinance, extend amortization have only increased. And if they're in any kind of financial strain or panic, they usually have a lot of equity in their property. According to 2016 census data, 88.4% of single-family detached houses are owner-occupied. Now, if we look at what the median value was in 2016, it's a total joke. That same category, the median value was $648,000. So that lends a little bit more insight to the fact that, property values have gone so high so quickly that people have way more options than they would have in flat or down markets in more troubling financial times. So when do I think we'll see the bottom of real estate prices in Victoria, BC? If I was trying to time the market, when would I do it? I can't predict that accurately, but if I was hazarding a guess, again, take this with a grain of salt, I think if there's a meaningful change in these supply and demand dynamics, we could see another small leg down. 50 basis points in December will have an effect, but if I'm looking forward based on the inventory story and what I'm expecting, I think we could see inventory build from the spring into the summer of 2023. If our expectation is that rates and demand will be suppressed into early 2024, that means that the build in inventory that we see, which usually occurs in the summer, could be the tipping point of this supply and demand in the capital of British Columbia. Now, there's a few variables that go into that I can't say. Does the Bank of Canada get past 4.25? Is inflation stickier than expected? How bad of a recession do we go into? How much unemployment is there in Canada? All those things I can't necessarily say, but just explicitly speaking to, if things stay where they are and demand pulls back even further and we get a little bit more property on the market, I think we could see the bottom of prices maybe mid to late 2023, summer 2023 is when I would call it. And then we could see sentiment shift. Maybe financial markets, stock market starts to move in the right direction. Inflation data starts to get less and less scary, and people feel a little bit more positive about the financial outlook. There could be more investment coming back into real estate in Canada. But because what we've talked about is rates staying and holding for maybe 12 months from when they get to their terminal rate, that could take us into 2024 until we have a meaningful change to rate policy in Canada. Now, whether that happens or not remains to be seen. Any kind of financial incident and the Bank of Canada could reverse course quite quickly, like we saw in other nations like the UK when their gilt market went upside down. So we'll see what happens. It's very difficult to say. But for a second, I'm going to ask us to stop. And I'm going to go back to the bull scenario for Victoria. Many of you that have been watching my videos know that I'm pretty passionate about my hometown, and I am an eternal bull on Victoria, BC real estate. Although it goes through peaks and valleys, and we are heading into a valley currently, I've got to ask my clients these questions, and I've got to offer this advice to you if you'll take it. On a 20 plus, 30 plus year time horizon, you're thinking about moving here, you're thinking about investing in Victoria, BC real estate. Let's look at some of these numbers and how they shake out. We're growing at about 1.6% per year. StatsCan believes we'll get close to 500,000 people by 2041. The federal government just released new immigration targets. More people are coming here. More people will see Victoria as a desirable place to live. And there is a finite amount of space that we have to work with. The only answer for more density moving forward is going to be going vertical or infill. So if you have the opportunity to buy land here, I suggest that you do it. You take a deep breath and you let the next few decades play out, because I think This is an incredible place to purchase real estate and will continue to be an incredible place to live. And add to the fact that we're a little under 4,000 new home starts per year, and the fact that now that we're in a down market, we could see a lot of developers pulling back on projects and not releasing them because market conditions just aren't there to realize max profits. So we'll see a lot of folks sitting on land, new housing starts from detached homes all the way up to apartments. Some of those projects likely will slow, and we may see inventory constrict over the next 2, 3, 4 years. All of that to say that I don't believe we're at the bottom quite yet, but we are getting closer day by day. I can't predict that accurately. I can't stress that enough. But if I were to hazard a guess and you want the best deal, maybe wait 6 months. My advice more often is if you're looking for a property in Victoria, look for the property that offers you long-term utility, upside in a location that's desirable. If you look at it with that kind of lens, I think you can probably zoom out in 10 years and not blink an eye at the idea of making a decision now to purchase in the best city in Canada. That's my feedback for today. If you enjoyed this content and found it informative, please leave me a like, throw a comment down below with your thoughts. And if you're new to the channel, subscribe for more great information on our beautiful city in the Victoria, BC real estate market. And I'll look forward to seeing you next time.